Hello ladies and gentlemen, thank you very much for joining me here on this video to look at a stock analysis of Microsoft company. I know it's been a while since I've last published my most recent video, and I'm very sorry about that. Sometimes life just kind of gets into the way. But I'm happy to once again start up this channel a little bit, look at some stocks, look at some valuations here for a few different companies, mostly European of course. But I thought for the first company, I thought it might be interesting to have a look at an American one. And the reason for this, of course, is a large shift in the geopolitical climate. Now, of course, I don't want to get into politics too much, but it does play a very massive role when it comes to these stock valuations, as we'll see here in just a minute. But before we get into that side of things, maybe first let's look at the recent financials here of Microsoft, because they released their 2024 annual report here with a fiscal year ending on June the 30th. So not the 1st of January. Microsoft's fiscal year ends halfway through the year at June 30th. Important to note here that all these numbers are from that period. Now, the last time we looked at Microsoft, we went all the way up to 2022. For this analysis, we've added 2 more years, 2 more amazing years for Microsoft's performance. Looking at its revenue growth here, overall, we always see double-digit growth, basically always, for the past 10 years here for Microsoft, which is insane for a company with a market cap of around $3 trillion. 2023, 7%, 2024, 16%. The overall trend is about 11% a year, so they've really kept in line with that overall historic average. When it comes to that EBITDA growth, we see double digit in the 20% growth here, mostly for the past 10 years, which is insane for a company of this size. Because just looking at the numbers here, they had $211 billion in revenue and about $100 billion in earnings before interest, taxes, depreciation, and amortization. These numbers are insane, staggering. I swear to God, Microsoft is just a different kind of beast. They are basically printing money. In 2024, they saw an EBITDA growth of around 30%. 30% for a company that already made 100 billion is beyond crazy. Looking at its debt level and cash level, I don't think there's much to say here. Their debt and cash is always kind of neutral. They always have more cash on hand than they have debt. They're a very stable company. Their books are very, very prominent. Like I said, they're printing money. Sometimes they just don't even know what to do with it. It seems almost like 5 years ago that we saw the Blizzard acquisition of Microsoft, but in fact this has only been 2 years ago. In 2023, they acquired Blizzard Activision Entertainment for $69 billion, one of the largest acquisitions in human history, which added, well, a measly, I'd say, $7.5 billion in revenue and $2.3 billion in EBITDA, which is just a drop in the bucket, to be fair, for their overall numbers here. So looking at their market cap, like I mentioned, $3.3 trillion in 2024, June 30th, 2024. I think they have been the biggest company in the world at some point. I think currently they're no longer sharing that title, but they definitely have previously, and I very well see them getting this title back here in the future as well. Their enterprise value, which is the market cap to which we then add the debt and we subtract the cash, basically in line, because these two cancel out, so basically in line here with their overall market cap. EV/EBITDA ratio, how is the valuation of this company historically? Well, historically it's been around 23.5 times, where we can definitely see it ramping up here in 2015 when it has some more negative growth and a lower EBITDA ratio. But it has definitely increased all the way up to 25.1 times in 2024, a high number together with 2021 before the COVID crisis. No, sorry, after the COVID crisis. My apologies. Sometimes time just blurs together. Overall, 23.5 is the average, and I definitely think 25 times is definitely on the high overvalued level here. I definitely kind of expect it to go back, which is also what we saw here recently. Net debt to EBITDA, not really important because they don't really have debt to speak of. So this then brings us quickly to the cash flow statement here, and we see a very similar pattern to their EBITDA growth, which is to say they had 180 billion in cash flow from operations, and then they had about 44 billion here in capital expenditures. Capital expenditures is basically anything that they need to put back into the business to keep operating the way they currently are and to keep future-proofing themselves for whatever might lie ahead. Now you might notice that there is a very big spike here of about 50% increase in capital expenditures between 2023 and 2024. This is because Microsoft has been investing heavily into data centers, into OpenAI, into their own AI. Billions of dollars have been spent on that, and billions of dollars are going to be spent on that in the foreseeable future as well. I think Microsoft released a statement that they'll be investing $80 billion into AI in 2025, an absolute record number for them to kind of get ahead in this arms race that they will imagine is the future of their company, basically. So the moment that you look at the cash flow from operation and you subtract the capital expenditures, you get the free cash flow, which is basically your pro rata ownership of the company. This is all the money available to you as a shareholder after their dues have been paid, after their operations are still manageable. This is all the leftover money available for distribution in the form of share buybacks, dividends, or also reinvestments into the company. And we see here that even though their capital expenditure has grown by about 50% in 2023 2024, their free cash flow is still at an absolute record number here at $74 billion. So it's not like they can't afford to invest 80 billion into AI. It's definitely possible for Microsoft, but it does mean that they'll probably see less share buybacks and maybe a less healthy balance sheet, as we have seen here for the past 10 years, a surplus of $100 billion in the bank at all times. Outstanding shares from Microsoft has been reducing by about 1% a year, steadily buying it back because they can easily afford to do so. The moment that we look at their free cash flow and we divide it by the amount of outstanding shares, we get the free cash flow per share, which is basically the amount of pro rata ownership that you buy if you buy one share of Microsoft. If you buy one share in 2024 for $450, you can expect about $10 back in free cash flow every single year. If we take their share price and we divide it, if we take their free cash flow per share and divide it by the share price, we get what is called a free cash flow yield. How much money compared to the share price are you expected to get back from this company? And we see here, kind of in line with their EV/EBITDA numbers, which has been spiking, their free cash flow yield has been lowering like crazy, which also means that they are approaching the kind of overvalued territory. 2.2 and 2.3% are relatively low numbers for any company, even a company that's been growing as much as Microsoft. So I definitely think this is reaching the overvalued number, which I think the market has also agreed with recently by kind of bringing it back, because in June of 2024 we saw a share price of $450. This has been increasing by 30% here for the past 10 years. If you bought Microsoft in 2015, you would have made an absolute killing in returns, and this does not even include the dividends that you would have gotten on top of this. So let's try to forecast this company, which is definitely not an easy feat, because right now it's a bit uncertain where the market will go into the future. Historically, Microsoft has grown with about 16% EBITDA, and this is not just in the early stages of the decade, but also recently. They almost always grew with 20% a year. Now, this is a bit of a high number, and I also expect a company as big as Microsoft to maybe see some diminishing results here into the future. So I'm going to be very conservative here and say they'll be growing by 13% for 2025 and slowly reduce it back by 0.5% in 2034. Historically, this has definitely not been the case. Historically, this is not accurate at all. It's actually a very, very conservative estimate. And the reason that I want to be very conservative here is because right now the geopolitical climate is on a bit of shaky grounds apparently for American companies, because right now America is kind of going into isolation mode, bringing back all kinds of manufacturing, starting a trade war with basically every country under the sun. Which does have an impact on the American companies, of course, because Microsoft is a very international business. And the moment that countries kind of see the United States as maybe an adversary, they will start to invest in their own solutions, their own cloud solutions, for example, as Europe has been doing. Europe has been realizing that maybe it's not very beneficial if all their government agencies run on Microsoft Azure. Maybe it's important for Europe to get their own cloud services and therefore step away from Microsoft, because right now maybe America is not the most trusted partner for the European Union. This will directly cut into Microsoft's earnings, into Microsoft's clientele, and maybe see some very diminished returns, which is also what the market has been expecting here. I'm also going to add a multiple of 20 times. Now, for the last 2 years, we've seen 25, which I think is very overvalued. I think even 23.5 is a bit on the high end. So also with my multiple, I'm going to be quite conservative. 20 times multiple. This gives me an enterprise value of about $7.3 trillion 10 years from now. Divide this by the amount of outstanding shares. Now, of course, this number can very well reduce. It probably will. But for the sake of this model, I will not incorporate the free cash flow into my stock price analysis. So this gives me then a stock price of $984, basically $1,000 10 years from now. For free cash flow, I'm going to do a very similar thing. Also see the free cash flow grow by 13% and drop it down to 8.5%, with a free cash flow yield of 3%, which is well above the 2% that we've seen here in the last 2 years, which I think was overvalued anyway. So maybe to return back to the mean, I'm going to give them 3%. Historically, they've actually had 4%, which is actually way higher than this. And then we can maybe see a lot more appreciation here. But I think for a company as big as Microsoft, maybe 3% is not that weird of a free cash flow yield. So I'm just going to keep it at this. So now looking at the stock price right now on the open market, you can buy as many shares of Microsoft as you want for $387. This is quite a drop from what we saw in June 30th, 2024, where it was $448. The market has corrected the price of Microsoft by about 15% already, because the market is uncertain of where Microsoft will be going in the future. Geopolitical uncertainty is an absolute killer for stock valuations, because investors are not sure what to expect. Will Microsoft continue to grow as it has for the past 10 years when economic prosperity was rampant throughout the United States? Maybe, but as it looks right now, there is a drop in GDP, there is probably a drop in earnings. Stock prices are based on the future expected earnings of a company, and if the market does not expect Microsoft to grow the way they have been, they're going to give it a lower valuation, which is what we have seen here from Wall Street. They have definitely reduced their targets for Microsoft. Now, overall, if we take our already relatively conservative estimate and we look at this number that we can expect 10 years from now of $950 a share, we can get a compounding annual growth rate of 9.4%. Now, this does not include any free cash flow that might be coming your way, because like I mentioned, if you hold the stock, you're also entitled to part of their earnings, their free cash flow, which can be distributed to you in the forms of dividends or in the form of share buybacks. This money is also coming your way, and if we include this number into our valuation, we can get an internal rate of return of 14.2%. A market-beating return by all means, by already one of the biggest companies in the world. Very, very attractive at its current valuation for sure, but once again, I do want to emphasize that this is stipulated on the fact that they will grow with double digits for the foreseeable 6-7 years. This might not happen. Right now, I really don't think the geopolitical climate is ready for this. We're also seeing indicators of maybe a potential recession in the United States. This kind of growth is immense for a company already as big as Microsoft anyway. So if the numbers are going to be less than this, also definitely see their valuation cut by quite a significant margin. If we, for example, expect an EBITDA growth of 10% for the next year, and also for the free cash flow growth, we can then see a share price 10 years down the line of $700 with an IRR of about 10%, about a market in line with market expectations. Now, I'm not sure what will happen, and therefore I think it's very difficult for me to forecast a company like this, so I'm going to be relatively conservative, but also look at their historic numbers, which do say around 16% increase in EBITDA growth. So I'm going to give them 13 to be conservative, but this may be very much on the high end of things. If it does pan out the way I anticipated here though in my models, then this means that you currently can get a 14.2% IRR if you buy Microsoft at the current share price, and if it drops even further to $350, maybe even 16%, and if it jumps up all the way to 465, which is about the all-time high, you can get an IRR of around 11%. Once again, turmoil in the world means turmoil in the market, and I'm not exactly sure where my predictions will go, but this is the best estimate that I can give you. For the next video, we'll be looking at some European companies which I'm mostly invested in anyway. I don't really have a lot of American stocks in my portfolio right now. I sold out most of them a few months ago as the Trump presidency was announced, because I don't think it will be that beneficial for the stock market, which so far has been quite true. So probably for the next few videos, I'll be looking at Ahold, I'll be looking at KPN, I'll be looking at maybe some European banks and maybe some European chip manufacturers, which of course will also be hit by the trade wars imposed by the United States. But we can do the best estimate that we're capable of, and I will definitely share the insights that I might have when it comes to these companies. Currently, I think Microsoft is still a relatively good buy. It's a safe stock. It's basically, like many people say, it's an ETF of a tech stock, because it does gaming, it does software solutions, it does hardware solution, cloud, it does social media with LinkedIn. Microsoft does a lot of different things. So I definitely think this company is not going anywhere in the foreseeable future and will only become bigger as maybe AI also takes off. So that was it for this video on Microsoft. Thank you very much for watching, and hopefully I'll see you in the next one. Cheerio.